welcome to today's webinar. So our main focus in today's topic will be on maximizing the potential of trade process. So I'd say the main people this will be useful for will be, of course, our existing clients that are looking to get the most out of the bridge, kind of learn new features, what they can be used for, and of course, like the synergies between these features and other features within the bridge, just overall use the trade processor more effectively. But also for kind of just generally people that are looking to have a better understanding of the capabilities of a liquidity bridge and everything that it can do. So today's agenda will be approximately a 30-minute-ish discussion on the functionality of the bridge. So basically a cheat sheet on a top-level overview of the main features within the bridge. Sorry, not the main features within the bridge, but kind of these three main topics. So how we can best navigate risk, how we can use the information stored within the bridge to not only get this information in the form of reports or alerts, but also use this information to analyze flow, analyze the tech setup, and overall lead to more efficient operations. And also from a trader's perspective, fundamentally how we can give a better environment for the traders. So whether that's in terms of offering new instruments, whether that's in terms of improving the execution, just offering the best trading environment possible. And then, of course, during the presentation, if you have any questions, I know we had a few kind of during the applications for the webinar, but yeah, if you have any questions as we go along, please write them down in the chat and we'll cover them within the Q&A at the end. So a bit about myself and the company. So for those that don't know, Tools for Brokers, we're a technology provider, mainly servicing retail brokers, prop trading firms, and hedge funds. In terms of what we do, so the main thing we're offering is the trade processor, which we'll be discussing in depth today, which is our liquidity bridge. But on top of that, we also provide plugins and PAM systems, so covering topics from risk management, managing client flow, managing clients, but also automating key processes. So overall, our main focus is on improving the tech stack, making sure your operations and tech runs as efficiently as possible. As for myself, so my name is Marcus Ingram. I am part of Tools for Brokers' UK team, and I've been working here for almost 4 years with the main focus on the above. So looking to improve the operations of brokers, these hedge funds, these props as much as possible, just to have the most efficient use of not only tech, but those that use our tech to use it as efficiently as possible. As for what we kind of won't be focusing on today, we're going to be trying to focus more so on the features that are less used. So when we see clients use liquidity bridging, we see that most commonly they're using the core functions. So the maker-taker connections on each side, these fixed connections, they're using it for the routing, so how they execute trades, whether it's on A and B book, the markups they apply, and then, of course, the feeding into the platform. We also see very commonly the standard reports, like the execution reports, the transaction reports. And what we've noticed that these are the common features that everyone uses and almost build this perception of what a liquidity bridge is. But today's focus will be more on what a liquidity bridge can be. So a lot of it in the sense of features that are underutilized, kind of have a real value-added impact and specific impact that can just straight away improve your usage of the bridge and your operations in general. So the main focus would be on how we can synergize between these different features to use the bridge kind of as a whole system rather than individual features. Kind of how these functionality combined can improve your operations, allow you to manage risk more effectively, and of course, lead to happier clients overall. So the first topic we'll discuss today is brokerage business intelligence, or BBI. I'd say this fits into the category of underutilized features because it's a new feature we've brought out. And essentially what this does is it's there to build custom trading patterns or identify custom trading patterns based on the client behaviors, the risks, or anything along those lines that you're looking to identify. So how it works basically is you can build a custom report or a custom alert based on these trading patterns. So, for example, if you wanted to identify cases of EA trading or high frequency trading, you can create a custom report um, based on how often they're opening and closing trades, the frequency of their trades that are structured this way, etc. Once we have built these reports, what it would do is two things. So an actual report will be listed of the accounts that fit this criteria, but we also have the option um, to set up an alert, so like an SMS alert, SMTP alert, or an alert within the bridge itself in order to, in real time, be made aware of this risk or this trading pattern being identified. I say the real advantage here is because it is within the bridge itself, you can very easily transition from having that information to then performing the action. So say you've identified this trading pattern, we deal with it in this way. You can do that within simply a few clicks and handle everything from within one console. A recent example that one of our clients benefited from was this specific case of high frequency traders. So they were using two liquidity providers. One was happy to accept this flow, one was not. So as soon as they were alerted of an account that was fitting this criteria, they were able to transition from sending this flow to the LP that doesn't like it to the LP that is happy to accept this flow. What this meant is that they're able to keep the clients happy, they're still able to trade, but don't upset that kind of institutional relationship that they have with the liquidity provider. That's just one example, but of course you can build custom reports here. So in terms of trading patterns, we have like 15 to 20 different trading patterns you can build that suit your specific requirements here. Another example of how this can be used is just on a more general level. So if you're looking to identify profitable traders, consistently profitable traders. So I think for both brokers and prop firms, if they want to identify clients that they can STP, clients that are consistently making profit, you can build these reports too. So this client is making profit on every trade, or even if you were to take the inverse, if you wanted to be notified of a client that's making large profit relative to their balance. So you can create these custom reports and then hedge accordingly, take the necessary actions. So yeah, on the topic of information reports and just general data in the bridge itself stores a lot of information that you can't get from other sources. So for example, um, the trading platform in liquidity. So the bridge has access to information that other bits of your tech stack do not. So the main example here would be kind of in terms of execution. So the bridge stores information on each component of the execution. So whether we need the trading platform, so the time a trade took to execute on the trading platform, the time it took to execute within the bridge, and the same from the liquidity side. So if you're looking to assess basically the slippage at each point, the execution time within each point, all of this information is stored here on every single trade, and you can build these custom reports based on that. So if you're looking to optimize your tech stack in terms of trade speed, execution speed, you can use this information to highlight kind of the key areas for improvement. So from this, you can identify it might be a difference from where the servers are hosted. Maybe it's a cross connect you need between the bridge and the liquidity provider. That's the main cause of these execution speeds. So if you wanted to be fully aware of the best way to execute your trades, you can take this information here. All of this information here too is available on a kind of a group level, platform level, and group level, platform level. So if you were looking to assess data from a certain group of clients, like maybe a MetaTrader group, you can see this information too. So you can pull from here reports on profitability from, for example, on your B book for your NT5 server, if you wanted to be that. Similarly, within here, we take snapshots of every single order. So that basically will show a real-time market snapshot of the current state of the market when that order was placed. So in terms of market depth at that period of time, you can use this information to help your internal people. So say if a client is asking why was this trade executed at this price, you can just go into the trading history, look at the snapshot for that order, and then straight away you have all of the information on why that trade was executed in that way. So from a time perspective, you can check that information straight away yourself and kind of respond to the traders as quickly as possible. So overall, you can just use this information to check for inefficiencies, kind of check for data you need, and use this as in combination with the other elements you're using for your risk management. On the same topic of data, so we have tools for kind of live analysis as well. So we're able to check firstly the live exposure. So similarly here, we can filter this based on the trading platform, the group, the LP, whether it's A and B book. And what this provides is basically an at-a-glance understanding of your current risk book and basically where the potential risks lie. So you may see from this, maybe you're kind of overexposed in gold, and because it's once again stored within the bridge, you have the options to hedge. So whether that's something you want to transfer volumes to a liquidity provider because you're overhedged on B book, whether you want to kind of switch live trades between A and B book, you can use this information here to make those changes. I think use this in combination if you're with your overall risk management. So the bridge is mainly here to focus on the A and B book risk, and to have that understanding within the bridge itself is very useful. We also can see the LP performance within here, which is essentially a tab to, in the same way that a liquidity provider will assess your flow and look at your flow in detail, you can essentially do the same thing to them. So for all of your liquidities you're able to check the pricing they're giving you, the average spread, the market depth, all of these factors. So you're able to compare cross LPs, which one's giving you the better deal, which one is providing the best pricing for each symbol. So overall, you can just provide the best pricing for your client and basically come back to the liquidity provider with the information that this is the price you're giving me, and yeah, make the changes based off this. On the topic of risk management, so kind of going to split this into volatility we see coming and kind of the unforeseen volatility that catches us off guard. So the main tool we see used here that can be used here is the profiles. Essentially, an execution profile is something that we can set up that you can switch to that will basically control you can control each part of the execution. So basically where the trade is routed, whether it's A and B book, whether it's aggregated, this kind of thing, the markups we place on the trade, and then also kind of who the trade is for, who this rule applies for. So whether it's for that symbol, whether it's for a certain order size, whether it's for just this specific account, etc. And the most common application here would be to set up a profile for high risk events. So, for example, if you see a big news event is coming up, like a non-farmers payroll or a central bank interest rate event, and you know that there's going to be volatility coming up during that time, you can switch to your high risk profile during that period of time. And that's going to depend on your unique business and how you want to adjust for risk. But a couple of the common applications here are to either just to A-book more flow during the volatile times to not take that risk on, or to adjust the markups for the market risk. So to change your markups during that period of time. And what we do basically is we've set up this high risk structure that is one of the above. And what we can do is switch to this or schedule this to switch for around that news event. So maybe an hour before, 2 hours before, and the same for after. And once that scheduling is finished, it's going to just switch back to your usual routing. The obviously ideal scenario is we'll be aware of all risk when they're coming in. But of course, sometimes, especially in today's market, there's risks and volatility can spike from random places. So in those cases, Since you have the profile already set up, you can quite simply switch from your standard profile to your high risk profile. So best case scenario, we'll be aware of the risk ahead of time and be prepared. But kind of worst case, you're caught off guard, you'll be able to switch quickly to your high risk profile and react quickly as possible. So the impact will be mitigated. Next, we have the fixed cabinet dashboard. And I think for a lot of kind of small, mid-sized brokers, often a logical extension of your product offering is to expand into providing fixed sessions, whether that's for the price feed, whether that's for institutional clients, or just VIP traders that prefer to trade via fixed API, like hedge funds or specific algo traders. And of course, within the bridge, we can provide these fixed sessions. But what we see less utilized is the fixed cabinet dashboard, which is basically a web interface to which you can log into with the fixed session you're provided. And it's just like a value add extra visual dashboard you can provide to your end clients so they can see kind of the real state of their margin account, all of the deals within the platform, the swaps they're being charged, etc. All of this information. So it's just like an additional thing you can provide that adds a bit of extra value to your liquidity offering or your kind of fix offering for these VIP clients. You also have the option to trade within the bridge, trade within the fixed cabinet as well. So that's just an extra add on there. Another thing is that obviously fix is the most common language we see used, but we can also provide these sessions via REST API. So if you're looking to kind of offer, provide a different offering to your clients in different means for integration, we can do that too. And I'd say another kind of lesser known thing is with the REST API that this information can, this API can be used to take the from the bridge and display it within your website. So like most commonly, if you're looking to have live prices on your website, you don't have to take this from the trading platform. You can take this directly from the bridge. You can use REST API for this as well. Moving on to kind of the more trader experience side, here's some of kind of the lesser known features we have that from a client perspective can only really add to the experience. So the first one is with the execution, how we can set up backups. So I think this is something that we see as underutilized and something that basically has no downside to using, and of course provides stability and kind of that extra layer of protection for the execution. So what we can do here is either for your A book, we can set up the backup to be another LP, or it can be your B book. And what this does is in cases that kind of hopefully never, but in those cases that you do have issues with the LP, it will just automatically switch to your secondary provider. So that will be either be B book or another liquidity. Once the primary source, which is obviously preferred, goes back up, it will automatically switch back. So overall, this is just a way of ensuring no downtime and just an overall better trading experience for your clients. We have the same thing with on the feeding side with the quotes. So we have ways to filter and block basically unwanted quotes from entering the trading platform. So off quotes, gaps that you get fed from one of your sources. There's two main logics here. So one is just like a hot or soft lock, which is based on a percentage variation from the recent quotes. So if you see just one quote is 50% different, you can tell that's just a off quote that you don't want to be feeding. And we can physically block that from entering the trading platform. We can do the same based on like the average price over the last 12 hours. So these are just ways that we can ensure that no unwanted quotes are reaching the platform. Another thing which focuses more on the client offering side is the synthetics. So we have both synthetic indices and synthetic symbols. So the synthetic indices is basically a custom basket of different commodities, FX pairs, cryptos, anything you want to combine into a custom basket. So maybe you wanted to offer a crypto CFD index, for example. As long as you have those price pieces already, you can choose the custom weightings and create a custom basket based off that. Similarly with the symbols, as long as we have two quotes, two currency pairs, sorry, that are denominated in the same symbol, we can create a synthetic from that as well. To say if we had two symbols denominated in USD and one was a regional currency, and you're looking to expand into that market, you'd be able to use that one, just having one currency pair in that regional currency, and from that basically a we offer many more currency pairs denominated in that regional currency for these emerging markets. Of course, from a product perspective, that's a good way to offer more instruments to your clients. But from a risk perspective, we can also justify this because we have the hedging available. So we are able to basically unscramble the index, split it into its individual components, and hedge those volumes on a book. And the same for the symbols. We were able to split these into split these into the original symbol pairs and hedge them based on the pairs that we use to create that symbol. Lastly, we have the aggregation. So I know aggregation itself is something that's very commonly used, but we do have different types of aggregation, so up to 6 types. The main ones that I think have value is all of them are based on that principle of best price and essentially offering the best price available to your clients. But they're looking to do other things at the same time. So, for example, to close the order on the same LP it was opened at, just for kind of margin reasons, to split orders to a certain percentage between different LPs for the same thing if you only had a set amount of margin on each liquidity provider. So it's really going to depend the best application on exactly your business cases and what you're trying to achieve. But one application which fits in quite well with the next slide is we can just take the best price on every individual order. So open, close, we're going to take the best price available, irrelevant of where the trade was opened. So from a client price perspective, we're always going to be offering the best price here. And what we can do is use that in tandem with the next feature, which is our volume consolidation. How this works basically is it checks your net position across all of your liquidity providers. If it sees that there's cases where you have, say, 5 lots of the same instrument bi-direction open on one liquidity provider and 4 lots sell open on another, it looks to mutually close the position in order to free up your margin and save on the kind of holding costs and the swap costs you're being charged at the LPs. This is something you can set up to basically be automated. So you run a rule, and at the end of each trading day, it's going to automatically check for you. So it's something that you can just structure, set up once. It will run automatically going forward, and then from then on, the only thing you'll see is your kind of exposure minimized across all of the liquidity providers you're using. So yeah, I will fit that. Thank you for listening. I hope it was useful for you. As I said, the main focus was just to give a brief overview on the business case for each of the features. But if you're interested in either learning more about the technical side, the technical explanation of the features, or how we can use these in your specific cases, feel free to reach out for existing clients, of course, to your existing success managers and the familiar faces. But for anyone else, feel free to reach out at the contact details below. So either at the sales email or via our website. So thank you very much. We'll now move on to the Q&A. So first question, we have a question on what kind of trading patterns does BPI track? So a pattern is basically a custom pattern that you create based on, it can be a number of individual individual like features you're trying to pick up. So like the profitability of a trade, it can be on the average opening of position time, it can be on swaps charging. So you're able to combine 2 or 3 of these things to create a pattern. So it's basically, these are the thresholds or the filters we're looking to identify. if a client meets all of these conditions, we'll identify that as them matching that pattern. So it can be just one thing. So it just be as simple as uh, the profitability of a trader, how profitable they are. But if you wanted to be more specific, you can just add more components to this rule. And yeah, so it's basically going to depend on your choice here. So what are the best practices for creating profiles? In terms of best practices, I'd say the main thing is to have different profiles set up for different kind of expected market events. So one would be like news events. One would be like, yeah, high risk profiles, maybe end of certain trading days. So you see that these times within the day are generally exhibiting more volatility. So basically, a profile can be based on a profile can be based on any part of the execution. So if you wanted it to be based on risk, you would set up a profile for risk. If you wanted it to be, and within this profile for risk, it will involve the different markups you want to change, the way you want to change the routing. So basically, anything from execution you want to change, or you may want to flick between, I'd recommend to set up a different profile for all of them. Isn't it risky to create synthetic instruments with little liquidity? So the synthetic instruments liquidity is based on the liquidity of the underlying currency pair. So the risk on the market depth in that sense will be the same as the underlying pair. So say if you create a synthetic index based on the different stocks, the kind of liquidity will be the same as those individual stocks when you look to hedge. So kind of the market depth and the liquidity will be the same there. So it's not necessarily an additional risk. Obviously, in the case that you're using a regional currency pair, it will have that less liquidity there. But yeah, the risk will generally be there, and the liquidity will generally be the same. I would like to learn time frame management, delay and slippage options, conditions of rules and triggers. So with time frame management, I think we covered that partly with the profiles. So it's basically how you can schedule different rules for different times of day. So assuming that's what you mean, we're basically, yeah, we're able to structure different time frames. So we can say end of trading day or around news, we can set up different execution rules for those times. Uh, Delay and slippage options. So yeah, the kind of slippage, if you're considering that as the markups you set, these can be set on the execution here too. Conditions of rules and triggers. Um, I'm not sure what this question means, but if you can reach out to us kind of outside of this, we'd be happy to go into that in more detail. Yeah. Yeah, I don't think we have any other questions. So yeah, thank you for listening. And yeah, feel free to reach out if you have any other questions. So yeah, thank you and have a nice day.